Hello everyone, Larry Lavrentich for Ichimoku.co and ForexTrading.tv with a daily analysis of the Aussie US dollar FX for the trading day ending Monday, December 2nd, 2013. Well, a change of trend back to the upside today. Candle has made a higher high and a higher low, and for the past few trading days we've had a mixture of downtrending days and uptrending days in the second time frame. If you recall, for the previous week I highlighted this rectangled area as an area of potential support for this market, and we saw for two of the past 4 trading days we saw the market find support down at that area and trade within that area, and now we have the 5th consecutive trading day as we're beginning trading for the new session, trading within that zone of support. And it has been an area that has held up any downside in this market. By the same token, the market has attempted to trade outside of the top of that area for the past 4 consecutive trading days as well, and has failed to do so. So we have this area and the previous resistance area at 9160 holding as resistance. So not only do we have support within the zone, but we have resistance at the top of the zone, and we are now looking for a breakout and a close either above or below that zone. Now a close down below the bottom of that zone and a bearish close could quickly see the market testing down to the 90-cent level, round number level, and a close up above may see the market build momentum to break out above 91.60. A break above 91.60 could quickly see this market trading to 92.21, save for the resistance at the 10%. Now, having said that the trend in the first time frame is up, the short-term characteristics of this candle don't actually suit continuation of that trend to the upside. If we look at the long shadow on the top of this candle, this highlights the very strong downside price rejection from above this rectangular zone and from the test to the 91.60 level. So very strong price rejection, suggesting that there is much doubt as to whether this trend in the first time frame can continue to the upside. We also have a small black body candle suggesting that there was a small amount of momentum, net momentum to the sellers. What we want to see for a trend to the upside is momentum to the buyers, so that doesn't favour continuation of the trend. But we also saw this market close down towards the lows, and that suggests that the sellers have closed with control of this market, so certainly no strength from the buyers shown here. The shadow here highlights the buyers losing commitment as they tested up above this highlighted zone, and suggests that there is a good possibility of a change of trend back to the downside and potential for the market to find support once again down at the bottom of this zone, and the low there highlights that rejection from the bottom of the zone to the upside at 90.50 cents. Now, in terms of Ichimoku, obviously still a bearish market in all 3 timeframes. We have the market trading below the cloud and also below the Kijun-sen, the pink line here, and below the Tenkan-sen, the green line here. So a bearish market in all 3 timeframes, and the Chikou span is below the corresponding price action, so it's confirming negativity in this market. So a likely scenario here is that if this trend does continue to the upside, we may see sellers come in and then the trend to continue back down. We will be looking for a break of this barrier at the downside around this 90.50 cent level. And as I've mentioned, if we do see a bearish breakout and bearish close down below there, we could quickly see the market testing to the 90-cent level and then even perhaps down below that area. But we do need to be patient and wait for the market to react to either of these levels and look for a close either above or below this strong area of support and now resistance.